Welcome to my channel. Let's see where Bank Nifty will move on Monday, what strategy we need to apply, what we can expect from the market. Friends, yesterday we clearly discussed like if the market is opening a flat and if it is crossing yesterday's swing, we'll be looking to sell the market and we'll be targeting up until 38,500 first, and the next target will be like 38,600, and the next target will be like 38,500. So what has happened in the market is like the market has opened a very big gap down and market went all the way to the sideways mode. So what was the reason? Like I was asking you to buy the put options. Go and watch any of the YouTubers. You might be following some of the YouTubers and you might have subscribed even a YouTubers like they themselves call as a professional traders. They say like the market is uptrend and we'll be looking to buy the market. We won't be looking to sell the market. Even if the market comes down, we'll just avoid the market. If the market opens flat, we'll be just looking to buy the market, and there might be a big breakout and we'll be looking to see like 40,000, 41,000, and some YouTubers like they were very much bullish and everything has came all the way to the lower levels. I was the only one. I don't praise myself like I'm the only one. Like my analysis is totally different because I analyze based on the data what I see, not what I think. There is two different things. Like I'm not a subjective guy, I'm an objective guy. Objective is like I have my objectives, I see the data and what is happening in the market. So basis on that I do my analysis. When you see here, it is a completely a low volume area. So what is a low volume area? It says like there's a lot of a stops got triggered in the market. What is a stop? Whose stop is this? Who has short this much? And whose stop losses got triggered? So first 5 minutes candle was the very important candle for me. I have noticed here someone has built a short position. So he tried to bring the market all the way to the lower levels. But what had happened, there was a buyer sitting here and he triggered his stop losses because the big players stop losses will be somewhere here and they'll be taking around like 200-300 points. Sometimes they'll be taking 1%, or either sometimes they might even take the 2% of an index stop loss. Index, I'm telling you, index stop loss. Take for instance like 38,900 if it is there. So 1% will be like 390 to 400 points. Institutions will take the stop loss. Exactly the same thing has happened here. The institutions has built the shorts here. This is an institutional stop. So the market came here. They started to sell because they have created an initiative. There is an initiative in the market. The initiative is like downside. But what had happened, the buyer was sitting here. He bought very aggressively here. So that means the institution has to go for a stop loss triggering. You can notice from 38,500 to 39,100. Avoid the 100 points. There is absolutely a 500 points of a stop loss has been taken by the institutions. There's a 500 points of a stop loss has been taken by the institutions. So what does an institution take a stop loss? When institutions takes a stop loss, so he has built a short position here. What he'll do, once he has taken a stop loss, he'll start to build again a same net short position in the market. You might think, okay, this is a pole and flag pattern. You can notice here there is a very good amount of a pole and flag. Just a second. Okay. You can notice here, okay, this is a very good amount of a pole and flag. Many people might have analyzed this one like thinking like, okay, this is a pole and flag and the same. What are the pole it is there? We might expect a higher side, the same thing. And it is a pole and flag pattern. And the market is going to rally at a higher levels. But what they don't understand is like this is a stop losses. This is not someone is buying, because if someone is buying, there will be an impulse or there will be absorption in the market. The market will absorb and it will go at higher levels, but there is no absorption. There's a completely a stop. You can notice here the market has been opened here. They tried to defend here, but they've noticed like no, it is not happening. So they've taken a 500 points of a stop loss. This is a stop loss. These are stops been triggered by the big institutions. How do I know? This will be dealt very much clearly at a course. So please do join our courses. So we'll explain very clearly what is happening and where the institutions will take the stops and how the stops work and how we can take the benefit of these stops. So that is why the reason I was repeatedly saying you yesterday 38,700. Please comment at my Telegram channel or YouTube channel. Please do comment it so that I would have given you these calls, because I know the stops are going to trigger in the market. How do I know? I know with the help of the order flow. and I have order flow. I have my own strategies, and based on that strategies, like I'm going to tell you the things like what is happening. You can notice here the institutions, they have taken this stop. When the stop has been taken out, what the institutions were having a net short. This is a net short. The same thing, the short has been built in the market. The net short is built in the market. So I was expecting if the market opens flat, I was expecting the same flush of up until here, because what the stops they have taken here, the same profit again they are going to book in the short side. They've covered their short and they've booked the loss. Again they've built the short on the higher levels. So again they are going to make the same profit here. So this is how the institutions work. They don't take the losses like we take. Yes, they do have the stops, but again they'll form the same side of a trend. If they are net short, again they'll make the market as a net short itself. They position themselves as a net short and again they flush the market. But what had happened today, you can notice like exactly the market has opened gap down and their net short, they got overnight profit. So that is the reason why I was repeatedly telling you to buy the call options from the morning. First, I gave you the call options. First was a stop loss which got triggered of a 20 points of a stop got triggered, and later I said you to re-enter again. We got nearly around like 40 plus 50, around like we got 50 points of a 50 to 70 points of a profit in the calls. Why? Because the institutions has built a shorts here. The market has opened a very big gap down. Sorry. So they have got overnight positions a profit, so they have to book the profit. The other profits will be somewhere like 38,900. I was expecting a 38,900 somewhere here, and later a flush down at a lower levels. But what has happened in the market is like exactly at these levels. You can notice. Just a second. Yesterday they have built the shorts again here. Exactly up until here 38,800 levels, the market came and it just retested and it flushed all the way to the lower levels. So somewhere right at the top here, I gave you to buy the put options of 400 rupees. 38,600 puts I said you to buy at 400 rupees, and it gave very good profit of nearly 540 rupees. So once I saw this momentum, later I thought like I have to just go because I was having meetings and I was a bit busy with my clients. So I just captured this momentum and I gave you the calls this momentum, and I said like once the 38,400 has been broken decisively, we might see a very good flush at a lower levels. But most of the day the market went sideways and there was a little bit of a stops triggering in the market. Again the market rotated down and it was completely a sideways market. So what does it says, like what is the sideways market says for us? The sideways market shows like the buyer is not intended to lift the market at a higher and higher prices. So the buyer is trying, little bit of a volatility is coming in the market, but at the same time the seller is sitting at a higher levels and is flushing the market at a lower levels. Well, I'll take you at a order flow chart. I'll show you what has happened exactly in the market. So in the order flow, you can notice here very clearly there is a seller. Someone is sitting and they're selling like there's a lot of imbalances in the market. That means someone is selling aggressively. And notice in each and every price the seller is coming and is selling aggressively. And a little bit of a buying is coming in the market. So based on this one, I said you to buy the call options because the market came and triggered the stop losses and it just went rallied on the higher levels. And later there is someone sitting here and is selling at a lower levels. You might have seen like some of the YouTubers might be saying you like, okay, buy the inside candle. If focus on the inside candle, if the inside candle is forming, that means there is a good amount of a buying opportunity. The setups might, you have this kind of a setup and you buy. That is all rubbish. Completely rubbish. You have to understand like what the buyers and sellers are doing. This is a very good inside candle. You can notice here, this is a very good inside candle. So inside candle, what does it shows? If it breaks at a higher levels, we are going to buy it, right? Because there's a big bullish candle, so the follow through will be at higher levels. But no, that doesn't work like that, because you need to understand the sentiment. You need to see the buyers and sellers interaction. This can be done with the help of only the order flow chart. So without the order flow, you can't do anything. The order flow clearly shows like what is the interaction between your buyers and sellers. So right at the top, I said you to buy the put options, and my stop loss was somewhere here, not here. I gave you 20-30 points of a stop loss, and risk reward I was expecting somewhere like 38,400 itself. Exactly, it came at 38,400. I said you to book the profits, and if you are holding, please do trial it. We might see up until 38,200 levels. But entire day there was a little bit of an accumulation and the stops got triggered in the market. Again the market flushed all the way to the lower levels. As you can see, as you can notice one thing in the order flow chart, there is a buyer coming. The buyer is trying to buy the market, but at the same time the seller is also coming and hitting the bids very aggressively. That means the buyer is buying. There is a buyer and as well as there is a seller in the market. That means it clearly shows like the buyers and sellers are fighting each other. So we might see a big move on either side. We might see a big move on the either side. Well, what we can expect from the market on Monday? So Monday will be a very tricky market. So you have to be careful. You have to handle it. So I'll tell you like net to net amount. You can notice like at the end of the day there is not much of a delta has been there, like not neither a buying or neither a selling delta has taken place in the market. That is absolutely like normal. That means the buyer and seller are equal. The buyers and sellers, they are not putting much efforts to lift the market at a higher and higher prices. So what we can expect from the market on Monday? So Monday, as soon as the market opens flat, if the market opens flat means like 50-60 points high or low, somewhere in this range. If the market opens in this range, we'll be definitely looking to sell the market. As soon as the market crosses this swing, we'll be definitely looking to sell the market and we'll target up until 38,200. If the 38,200 crosses, we'll be looking to buy. We'll be looking to trail our stop loss up until 38,000. So if the market opens flat and if it starts to go higher, we'll just let the market to go. We'll be looking to buy only about 38,800. We never know, like if the market goes higher and if it take resistance, and it might even flush at a lower levels. If we see a big gap up above 38,800, we'll be definitely looking to buy the market, and our target should be like 39,000 should be our first target, and next target will be 39,300. If we see a very big gap down like today, there is a net short in the market again. This is a net short in the market. There's not much of a conviction, like buyers and sellers want to lift the market. So I'll consider this as a net short. So again, if the market opens a big gap down like today, we'll be definitely looking to buy the market, because the people on who have taken a put options, they'll be getting overnight profits. So they'll all be looking to book their profits and market might propel and retest at these levels. So overall the sentiment is looking negative. It is looking bearish, because every rise, whenever you can notice like the market is coming at 39,000 levels, the shorts are building. Whenever the market is rising, the selling is coming. That means there's a lot of shorts in the market and the big players want to sell the market. That is why we are seeing a lot of volatility in the market. So this volatility will help us to make the money. So if you want to know more about these things, please do subscribe my channel and press the bell icon button. And if you want something to learn, please do comment at a comment box as well. Thank you so much.